What if I told you that the money in your wallet might not be worth what you think it is? Not just because of inflation, but because the entire foundation of global finance could shift beneath our feet. The US dollar has been the world's dominant currency for nearly 80 years. It's the currency that oil is priced in, that international debts are settled in, and that central banks hoard as their safety net. But nothing lasts forever. And right now, cracks are starting to show. So what actually happens if the dollar loses its power? How would your daily life change? Would we see chaos? Or just a gradual shift to a new normal? Today we're diving deep into one of the most important economic questions of our time. Before we talk about what happens when the dollar falls, we need to understand why it's on top in the first place. The story begins in 1944. World War II is still raging, but Allied leaders are already thinking about what comes next. They meet in Bretton Woods, New Hampshire, and create a new global financial system. The US dollar becomes the world's reserve currency, backed by gold, while other currencies are pegged to the dollar. Why the dollar? Simple. At the end of World War II, the United States held about 2/3 of the world's gold reserves, and was the only major economy that had been devastated by war. The US was the obvious choice. Even after President Nixon ended the gold standard in 1971, the dollar remained supreme. Why? Because of something called the Petrodollar system. In the 1970s, Saudi Arabia and other oil-producing nations agreed to sell oil exclusively in US dollars. Suddenly, every country needed dollars to buy energy. This created constant global demand for American currency. But here's what makes the dollar truly powerful. It's what economists call the reserve currency. Central banks around the world hold about 60% of their foreign reserves in US dollars. When countries trade with each other, even if America isn't involved, they often use dollars. It's the lingua franca of global finance. This gives the United States extraordinary privileges. The government can borrow money at lower interest rates. American companies can trade internationally without currency exchange costs. And the US can impose devastating economic sanctions because most international transactions flow through dollar-based systems. But empires don't last forever. And the dollar's empire is showing its age. So what are the warning signs that the dollar's dominance might be ending? First, let's talk about the national debt. The US federal debt now exceeds $35 trillion. It is a very huge amount of money. When you owe that much money, people start wondering if you can actually pay it back. Every time there's a debt ceiling crisis or political standoff in Washington, the world watches nervously and thinks about alternatives. Second, weaponized sanctions. After Russia invaded Ukraine in 2022, Western nations essentially cut Russia out of the dollar-based financial system. It was economically devastating for Moscow. But it also sent a message to every other country. If you end up on America's bad side, your dollar reserves could be frozen overnight. That's made countries like China, India, and Brazil think seriously about reducing their dollar dependence. Third, the rise of alternatives. China has been pushing its currency, the Yuan, for international trade. The BRICS nations are discussing creating their own currency or payment systems. Even cryptocurrencies, despite their volatility, represent a desire for alternatives to traditional currencies. Fourth, the shift in global trade patterns. China is now the largest trading partner for more countries than the United States is. When Chinese companies trade with African or South American nations, they increasingly skip the dollar middleman and trade in yuan or local currencies. And finally, there's the simple fact of economic gravity. In 1960, the US represented about 40% of global GDP. Today, it's closer to 25%. As other economies grow, especially in Asia, the logic of everyone using one country's currency becomes harder to justify. None of these factors alone would topple the dollar. But together, they represent a slow erosion of the foundations that made dollar dominance possible. Which brings us to the big question. What happens if that erosion accelerates? Let's break down what actually happens if the dollar loses its reserve currency status. I'm going to give you both the immediate shocks and the long-term changes. Your first concern should be your purchasing power. Right now, because the dollar is in such high demand globally, it's stronger than it would otherwise be. If that demand drops, the dollar weakens. What does that mean for you? Imports become more expensive. That iPhone you're eyeing could cost 30% more. Gas prices, they could spike because oil is priced in dollars. And if the dollar weakens, oil becomes more expensive for Americans. Your vacation to Europe significantly pricier. But here's the twist. It's not all bad for everyone. American manufacturers could actually benefit. A weaker dollar makes US exports more competitive. That factory in Ohio making machinery suddenly finds it easier to sell to customers in Mexico or Germany. This could mean more manufacturing jobs returning to America. Your 401k and stock portfolio would likely take a hit, at least initially. US stock markets could become more volatile. Treasury bonds, once considered the safest investment in the world, would have to offer higher interest rates to attract buyers. If you're retired and living off bond income, this volatility would be stressful. Real estate could go either way. Higher interest rates would make mortgages more expensive, potentially cooling housing markets. But if people see real assets as safer than dollar-denominated savings, property could hold its value better than cash. This is where things get really serious. The federal government would face much higher borrowing costs. Remember that $35 trillion debt. The interest payments would skyrocket. This would force difficult choices: raise taxes, cut spending, or accept even higher deficits and more inflation. The US would also lose its most powerful foreign policy tool, economic sanctions. Right now, cutting a country off from the dollar system is devastating. But if countries have built alternative payment networks, sanctions become far less effective. Here's where it gets complicated. In the short term, a dollar crisis could trigger global economic chaos. Trillions of dollars of debt around the world is denominated in US dollars. If the dollar's value becomes unstable, it creates uncertainty everywhere. International trade could slow as businesses figure out which currencies to use. But in the long term, we might end up with a multipolar currency system. Instead of one dominant currency, we could have regional champions: the dollar in the Americas, the euro in Europe, the yuan in Asia. Some economists argue this could actually be more stable. With no single country having outsized influence, perhaps the biggest fear is inflation. If the dollar weakens significantly, the cost of imports rises, creating inflation. The Federal Reserve might have to raise interest rates dramatically to defend the dollar's value, potentially triggering a recession. This is the nightmare scenario: stagflation, where you have both economic stagnation and rising prices. So what would actually trigger a dollar crisis? The most likely scenario isn't a sudden crash but a gradual decline. Countries slowly diversifying their reserves, trade increasingly conducted in alternative currencies, and the slow erosion of confidence in US economic management. But there are potential shock triggers too. A major debt crisis where the US government comes close to defaulting, a geopolitical crisis that causes major allies to lose faith in American leadership, or a technological disruption, like a widely adopted digital currency that offers a genuine alternative to the dollar system. Some experts argue we're already in the early stages of this transition. China and Russia are trading oil in yuan. India is buying Russian oil in rupees. Saudi Arabia is discussing pricing some oil sales in currencies other than dollars. These might seem like small steps, but they're historically significant. The question isn't really if the dollar's dominance will end, but when and how fast. So what should you take away from all this? First, this isn't about panic. The dollar isn't going to collapse overnight. What we're talking about is a potential transition over years or even decades. Second, change creates both winners and losers. While there would be significant disruptions, there would also be new opportunities. History shows that economic transitions, while painful, also drive innovation and adaptation. Third, the best protection is awareness and diversification. Understanding these trends helps you make better decisions about your savings, investments, and career. The era of unquestioned dollar dominance may be ending, but that doesn't mean America is ending. It means we're entering a new chapter in global economics. The countries and individuals who adapt to this reality will be the ones who thrive. What do you think? Is the dollar's power fading, or will it remain dominant for decades to come? Let me know in the comments below. If you found this video valuable, hit that like button and subscribe for more deep dives into the economics that shape our world. Thanks for watching, and I'll see you in the next one.